Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. So in today's video we are doing part 2 of the ETF series that we started for 2025 ETFs that you could potentially buy and hold for a very long time. Now, one of the things that we talked about last video is the fact that if you are kind of new to investing, or if you don't have the time to look at individual stocks, the best thing to do is buy in ETFs and forget about them. And one of the things that we talked about that is advantage in terms of ETF side of things is the fact that you buying a very diversified portfolio already. Right now, what I'm trying to do here in this portfolio is literally building my own basically ETF. Okay, and as you can see, there's no expense ratio, but I'm building my own ETFs because you've got different sectors. I'm managing everything. I'm buying individual stocks and keeping up with every single news about these companies and so on. And it's a full-time job, genuinely. And in the long run, it's not sustainable unless you have a lot of time, right? I do enjoy it. I genuinely love doing basically what I'm doing right now. And I will not be investing a lot of my money into ETFs yet, but potentially in the long run I might be. So that's the beauty of having an individual basically ETFs rather than individual stocks, is the fact that it's diversified. You don't have to keep up with the news and everything. They do the rebalancing and all of these amazing things that basically I regularly do. They do that for you, but of course it comes with a cost, and that cost is the expense ratio. That expense ratio can eat into your investments, and I'll talk about a bit more about that. One of the couple of brothers have reached out to me and said, okay, you've talked about ETFs the other day as a favorable thing, so why do you have all your money in individual stocks rather than ETFs? Why don't you just buy it? And there are a couple of course answers to that. And the first one is the fact that, like I said, I really enjoy buying individual stocks. I can see I've learned so much about doing that. I've got a lot of time, and I want to continue. I really get excited about it, and I know in the long run I will do well, InshaAllah. And the second thing is the fact that the expense ratio for some of these ETFs is absolutely ridiculous in comparison to what's out there right now. So if you look at the VOO, where you've got like 0.03 and SPY and so on, it's quite expensive when you look at some of the ETFs that basically are available to us, and that's something that I'm going to talk about today. So I'm going to show you what would happen if I actually take all my money, so 117,000 here, and put it straight into one of the ETFs. I'll tell you exactly in 15 years how much it will cost me in the long run, how much I will make, and so on. So that will be a little bit fun to actually have a look at. Now, if you haven't seen the last video where we talked about the ETFs, is this one here. So building a halal ETF portfolio for retirement. That is part 1. So today what we're going to do is part 2. And the first ETF that we're going to look at is this one here. Okay. And this one here, it's important. Like I said, you've probably already seen it, but an ETF number 4 is a bit of a surprise, and it's not Sharia compliant by design. Okay, so it was not designed that way intentionally, but it is basically Sharia compliant. But I have a problem with it, and I'll tell you exactly what the problem is at the end of the video, InshaAllah. Right, so the first one we're looking at today is the ETF from iShares. iShares is basically owned by BlackRock. Is based in Ireland, in Europe, and of course it is one of those ETFs that are mainly for UK, but I don't know if it's available. I think it's available in Switzerland and other countries, but mainly in the UK. So if you go to there, you will see basically what countries you can actually trade in. So registered locations, there we go. Okay, so these are probably the countries where you can actually buy this ETF. Now, as you can see here, currently trading about £49, and the total expense ratio is 0.3. It used to be 0.5, so they have reduced it. And this is one of the things that I'm hopeful of, is the fact that some of these ETFs will have a slightly expense ratio basically in the next 10 plus years, InshaAllah. Why? Because there will be more competition, InshaAllah. I'm really genuinely, what I'm waiting for is the day where Vanguard decides to have a Sharia compliant ETFs, because they're the ones that are very well known for having a very low expense ratios. Now, the difference between this one and VOO, for example, in terms of maintenance, is huge. Now, VOO, you just tracking the entire S&P 500. You don't have to filter it through or check it every regularly or anything like that. Whereas this one is a little bit more different because you have to keep checking, okay, the Sharia compliance side of things, and if it meets the standards, you have to kind of rebalance it, check the the distribution, all of these things that happens. So maybe Vanguard will get into this market, inshallah, soon enough for us to benefit, inshallah. So right now the year-to-date return is terrible. It's about 6%, which is not great at all, okay, in comparison to, I don't know, 25-26% the S&P 500. They have a different distribution yield, which is the dividend, so 1.36, which is decent, and that's semi-annual. Currently they have 649 million in terms of asset under management. They rebalance it regularly, quarterly. Sectors is about 11 different sectors on that, basically within that basket of companies. And you can buy it for your ISA, and number of holdings is slightly higher than the one that we've seen the other day, which is 356. Now, one of the major issues with this one is the fact that it almost looks like they identical to the one that we looked at in the last video. So if you haven't seen that, go and watch that one first. But it's very much the same, apart from a couple of companies. Right, couple of companies that I like. This company, for example, I think is a German software company. We also have ASML, because remember, this is supposed to be for the world. The other one is just based on in just the UK, the US. So as you can see, you got Microsoft 18%, which is crazy, and then Tesla 7%, and so on. Again, this, I don't like that idea of having basically, I don't know, 18% or 24% just Microsoft, which is ridiculous, and the rest of them is about 2%, 2%, 2 point something percent, and 1.4% for Cisco. So overall, it's okay. 41% in terms of the top weightings, and there's 356. So closer to at least the rest of that percentage is basically spread around that, between the 356. The only issue I have is basically this one here, and the fact that this is very much similar to the US version of it. They should have changed a lot, because some of these big boys are good. For example, Procter & Gamble and J&J, I don't think they belong here. One of them maybe. Procter & Gamble, keep it there. J&J, get rid of it. Maybe add a little bit more diversity in terms of high growth companies. You've got Tesla and Microsoft, I get that. But what about maybe add Broadcom, for example, and get rid of one of these? Or maybe add any other, other European or Japanese, or, any other Korean, something else other than just the usual J&J and whatever. This is what is letting this ETF down. So that's the first one. The second one is Halal. Halal is one of those ones that, and I'll tell you exactly what I would be doing personally, because this one is available in the UK. So I'm going to tell you exactly which ones I would be investing and will not be investing. So this one I will not be investing already. Why? Because the other one that I have is very similar, and that one is mainly for the US, and I know the US in the long run probably will do better than some of some of these other countries. So inshallah, that's the first one. This one I will not be investing in this. The only issue I have is, the main thing is, first of all, the expense ratio is very high, 0.5. Okay, that's not right. That they shouldn't be doing that. That's too expensive. When they know the market, there's other ones that are slightly cheaper. They should basically make this slightly lower. A year to date is done really well. Okay, distribution right now, the UK one is accumulating, so that means in the UK you're not going to get the money, but they reinvested it for you. But in the US you get 0.57. That's annually, so once a year you get the money. So right now they have 570 million under asset management. Rebalance is basically quarterly, and sectors about 10. Is you can buy through your ISA, and number of holdings is 218. The reason I said I will not be buying this is the fact that the company itself, the Wahid company, had an issue a while ago where the SEC had to find the company because there was some irregularity, if I can say the word, within their business. There was something that they did wrong, and they admitted that they got fined for. Now, it's a very small company, so I don't know if I trust them enough to actually put a lot of money into this, and that's just my personal, because I'm not trying to lose money. I don't want to find out this basically completely stopped operating. Something happens and then you lose your money, or the stock tanks and something crazy happens. But in terms of the holdings for the top 10 is over 53%. And 15% of that is actually Microsoft and Apple, and then another 14% of Microsoft. So you've got about 30% for the top two, and then the rest of them is about 5%, 6%. This, again, I really hate this stuff. Why can you not do the same as Meta and so on? And again, remember, all of these companies are not individually Sharia compliant. Maybe there might be question mark about some of them, but collectively as a whole ETF thing, okay, they need to apply the standards for Sharia compliance side of things. So in terms of performance, it's done absolutely amazing job. Really, really good. Like in comparison to some of the other ones that we've seen, which is about 5%. Okay, but again, is the fact that this is too high, and the fact that I'm slightly have a question mark on over Wahid. Again, if you feel comfortable enough to actually know someone who knows the business well enough, or the people well enough, and you can trust them and all of that, then that's fine. In comparison to iShares, which is owned by BlackRock, which is the biggest asset management in the world, I don't think that's going to basically go busted like in the next whatever years. Whereas this one, you never know, and that's why I'm just a little bit skeptical about it. Okay, so the next one that we're going to look at today is this one here, SPUS. Again, very similar situation. I would love to know more about the people who are behind this business. I don't know who they are. I don't know if it's just individuals, if it's basically collective people that came together, if it's a family-run business, or whatever it is. I would love to do a little bit more research. However, this one is not even available. I don't think it's available in the UK yet. So InshaAllah, they will come to the UK, and that will help us overall reduce the expense ratio. But their expense ratio is 0.45, so it's slightly higher than the first one, but it's slightly cheaper than, of course, Wahid here. Okay, currently trading $43 per share. The year-to-date return is 29%. So they are beating the S&P 500, which is absolutely amazing. If you own this ETF, credit to you, well done. Okay, but I think it's only available in the US. If I'm wrong, just let me know, inshallah. Distribution yield is 0.68. They pay dividends monthly. Please let me know, because on their website, it actually has a list of the months that they pay. Like every single month they've been paying it for the last 12 months plus. So that's very interesting. I didn't know that was a monthly dividends, and you're getting 0.68, which is not bad. Okay, basically 927 million and asset under management, so it's growing, which is really good. Rebalance frequency is monthly, which is good. 8 sectors, and of course it's not available to us in the UK, and number of holdings is 240. Now the reason why it's outperformed to the S&P 500, and maybe is because it's got Nvidia, it's got Broadcom, Eli Lilly, some of the companies that have done absolutely amazing, and Tesla, of course. So 55% of this ETF is actually top 10, which is absolutely crazy, but 240 holdings in there. So overall, really good performance, genuinely very good performance. It's slightly expensive, but very, very good performance. I really like that. So yeah, this is if this was available in the UK, potentially I would be looking at it, this one and Wahid, because they both done really good in terms of performance side of things, and that's potentially what we should be looking for in terms of return from your investment side of things. But the issue is that expense ratio. In the long run, it will eat into your investment, and I'll show you exactly what I mean by that in a second. And the final one, which is not a Sharia compliant by design, but it's basically, it just happened to be Sharia compliant right now, and I'll show you here. If you go to Musafa, for example, and type the ticker symbol here, it comes up, it says it's Sharia compliant. And then when you look at the holdings, they've got loads of the holdings that are basically, some of them are Sharia compliant and so on. And now the reason why it is basically is similar to what we did in the last video, where we talked about another ETF. That's the technology company. Okay, so tech normally seems to have a lot more companies that are Sharia compliant, because it's the stuff they do is actually compliant with the standards that we're normally looking for. With this one, it's available, of course, in the UK, $32 per share right now, 0.5. So expense ratio is slightly high. But check this out, 13%, 14% in terms of year-to-date return, which is not bad, but it's not as good as what we've seen from the Sharia compliant ones already. And they do have some distribution, which is very weird because a lot of these companies do not pay dividends. So I don't know where that's coming from. I don't even know why they're doing this. But apparently based on the research that I've and their website, they actually do have some sort of a distribution of dividends. 819 million in terms of asset under management, and rebalance frequency is semi-annual. Now, yeah, like I said, it's one sector, it's a cybersecurity sector. It is available in the UK, and there's only 21 stocks in there, and 10 of that is basically 57% of this. Now you got Fortinet, you got CrowdStrike and Checkpoints and Palo Alto Networks, Zscales. So you got the big boys there and Octas and so on. And I like the fact that it's actually very well diversified in terms of the weighting, 7%, 7%, 6%, 5%. I like that. They're not really the 5%, but this I've just rounded them up. But yeah, so they are, it seems interesting, but again, the danger is you have to keep up with it. There's 21 stocks in there. If you are willing to check it every single month or quarterly, making sure that this stays Sharia compliant, all the companies in there, then it's not a bad one to look at. But the performance is, you're not outperforming the S&P 500, so you might as well buy the ones that are Sharia compliant and that have done actually better and sleep well at night without having to worry about, you know, checking it regularly, whatever. Okay, but that's the bit of the risk that we have with this one. And I'm not saying it's Sharia compliant. This website definitely is saying it, that is, but you need to do your own research. So you can look at, for example, what they normally look for. The business side of things, basically they're saying is very low in terms of the interest-bearing assets, for example, is actually very low. And this, when it comes to interest-bearing securities, exactly the same, which is quite nice to see. So overall, it seems is a decent one. The performance is not that bad. And if you think cybersecurity companies will be outperforming the S&P 500 or doing really well over the next few years, maybe is a one that to look at, inshallah. But the expense ratio, again, is a bit high. Now, let's talk about the expense ratio. That's the ETFs that I wanted to share with you guys. So you can see all four. You can pause the videos and have a look at a bit more information. But one thing I want to talk about is this expense ratio thing. So someone asked me the question, if I had taken all my money and put it into the S&P 500, say, for example, I bought one of these ETFs, right? What would happen? Let me show you. I've got £117,000 in this account, right? Annually, I like to add about £1,000, let's say, moving forward every single month, every single year. Okay, £1,000 every single month. Sorry, 12,000 for the year, and the annual expected basic return for the S&P 500 is between 7 to 10%. I'll go 8%. I'll say 8%. So if we go with the first one and I say, okay, I'm putting all my money into this one, right? The expense ratio is 0.3. I want this for the next 15 years. Look at this, 674,000 US dollars, and look at the expense ratio, 22%. 22,675 US dollars. That's how much I would pay over that 15 years period, which is absolutely ridiculous. Okay, let me show you. If I decided to use, for example, we can't invest in VOO, but if these companies gave us a low expense ratio, okay, that is the VOO, the Vanguard S&P 500. If I did that, right, I'm not saying we'll do it because it's not Sharia compliant, okay, and keep this 15 years, let's see what happens. Only 2,300 total cost of the fund in comparison to over 20-something thousand. So this is why I'm a bit hesitant with this expense ratio situation. It is really not that good, right? It's just not. Yeah, I don't know. But in the long run, like I've always said to you guys, if you are thinking of a passive investment, just buy and hold, forget it, then probably this is the easiest way. And inshallah, I promise you, I've already seen it from 2020 when these ETFs were coming out for the iShares, whatever. They were 0.5. Right now it's 0.3. If you look at some of my old videos, you'll see we were talking about 0.5. Right now it's 0.3, which is good, alhamdulillah. So inshallah, next year will become 0.2, and then the year after 0.1, and then we'll have 0 point something. Inshallah, that's the plan. Inshallah, right? So Someone else asks, how do we then, where do they take this money from? So what happens? This is basically automatically detected from your from the investment, so you don't really have to do anything. So they literally taking bits of every single day. Sometimes they do the monthly. Majority of them they do daily. So they take it from the entire assets, and they take percentage of it, and that gets deducted from your account. So you don't really necessarily need to pay anything extra. Okay, and that's, in a way, it's fine, but it's just that know the fact that basically you're paying this much. So if we were doing Wahid, for example, or Wahid was this, wasn't it? This is what you'll be paying, 33,000. If we do 0.5, okay, 37,000. If I started putting all my money into one of the ETFs right now, and a dollar cost average every single month, 12,000, basically £1,000, and I expect the S&P 500 to give me 8%, and the expense ratio is 0.5 for 15 years, this is how much I will make, and that's how much I will pay in. If I invested that much in the same period of time, okay, with the same sort of methods, right? Look, I'll be making over 400. So again, it's just, I don't know, it's just disheartening to see how much you will be investing and how much basically you will be losing if you did this. So overall, my point here is ETFs are great investments if you don't care about the fact that the expense ratio is high right now, and inshallah in the long run will come back down. So for now, dollar cost average, buy every single month, forget about it, and just move on with your life. And you don't have to keep checking what the S&P 500 is doing, whatever. You dollar cost average every single year, and that's it. You don't need to do what I'm doing right now. So I don't want to make the video any longer than it needs to be. Go and watch this video first, okay, and watch this one after, inshallah. And I've got a few more. So one of the brothers suggested this one. So if you've got any other suggestions, any other halal the ETFs that you think that potentially we can talk about, add it to the list. I've got, I think, another 2 videos of ETFs coming up, inshallah, and we can extend it if you have a few more suggestions, inshallah. I've got a few days off, inshallah, so I want to do as much as I can for the community, inshallah, before the year starts, inshallah. Have a wonderful day. Assalamu Alaikum.